Okay, you've heard it 1,000 times, or maybe a million times. Buy term, invest the rest. That's the advice. It's repeated endlessly. You've probably given it to yourself. But here's the part that nobody talks about: the banks. The ones that tell you this don't follow it. In fact, they do the opposite. They quietly pour billions of dollars into the very product they tell you to avoid. And so the obvious question is, why? It's not just hypocrisy, it's strategy. Because the banks aren't in the business of investing like you are, they're in the business of owning. And they use one of the most stable, predictable, and tax advantaged assets on the planet to do it: dividend paying whole life insurance. Now, in the arena of banks, it's referred to as BOLI, bank owned life insurance. And so the same thing that you've been told is boring, outdated, or only useful for dying with, it turns out that it's none of these things. It's just not for sale at your neighborhood bank because they already bought it for themselves. And so if you've already started to rethink everything that you've been told, just click the link in the description below and check out that free session that explains the whole system, how it works, and why nobody ever told you. Okay, let's talk about what the wealthy actually do. Let's address the facts. Banks are required to hold what's called tier one capital, which is their safest, most liquid, most reliable reserves. So, what do they hold? One element of their tier one capital: cash value life insurance. I want you to think about that again for a moment. Bank owned life insurance. The specific type that I'm describing is dividend paying whole life insurance that builds cash value rapidly. Now, I want you to think about that. Really stop for a moment and let that sit. The very product that they tell you to stay away from is what they themselves use to protect their own balance sheets. And that is an opinion. That's public record. Bank of America, Wells Fargo, Chase, they're all holding massive amounts of dividend paying life insurance, not because it's trendy, but because it's stable, it's predictable, it's profitable in a way that the public simply doesn't understand. In fact, the banks refer to it as their most stable tier one capital. The truth is just hidden in plain sight. The infinite banking concept, again outlined brilliantly by the developer, the pioneer of the concept, my late mentor, the late R. Nelson Nash, who authored this book titled Becoming Your Own Banker. This is my original copy from 2008. It takes a couple of hours to read. It's literally just 60 pages of reading. It's 92 pages in total, but 60 pages of reading. And this book changed my life and has since changed the lives of 5,000 clients that we're privileged and blessed to serve across the United States and Canada. It isn't about life insurance. The essence of the infinite banking concept is to recapture the interest that you presently pay to banks, to finance companies, to credit card companies for all those things that you need to finance over the course of your lifetime. The concept is about controlling how you finance all those things that you need throughout the course of your lifetime. Things like cars, property, appliances, home renovations, vacations, weddings, college education, anything that you would otherwise pay cash, lease, or finance. Controlling how you do that is going to radically transform your financial future. Think about it. When you need money, you borrow it from the bank. They charge you interest. You pay them back. Their stockholders get richer. Now, imagine if you controlled how you finance the things that you need, so that when you need money and you're taking care of this concept through the device of dividend paying life insurance from a reputable mutual life insurance company, you have contractually guaranteed access to policy loans. You borrow capital directly from the life insurance company, which you co-own just by virtue of being a policyholder. You control the repayment schedule of that loan. And when you repay that loan with interest, every dollar that you repay, you get to re-access, and you get to do it on demand on your terms. And the cash value inside of your policy cannot go backward. It just continues rising every single day, uninterrupted by the loan balance. The death benefit of the policy is ever increasing. That puts you in a position of total and absolute control. You pay no tax on the daily buildup of cash value. You pay no tax on the annual dividends when they're chunked back into the policy to buy paid up additions at no additional cost. That is total and absolute control. Nelson in the book referred to it brilliantly as becoming the four characters in the financial play: the depositor, the borrower, the banker, and the bank owner. And when you become all four characters, you literally create indestructible wealth. That's infinite banking. And that's why banks don't want you to understand it, because the moment you do, and the more you implement, you stop needing them. So again, this is all about the way that you think. And so stop for a moment and think about what I just shared. And if you're seeing this for what it is, a chance to flip the power structure on its head, just click the link in the description and take a deeper dive. It's free, it's clear, and it's refreshingly honest. Let me give you a simple story. So I want to describe to you a scenario, clients of ours, husband and wife, both professionals, both started policies. Now, they didn't initiate for the death benefit. There was certainly a need for the death benefit of the insurance policies, but they didn't initiate for that purpose. They initiated for life, not for death. They wanted to take advantage of all the living benefits of being policy owners and wanted to implement the infinite banking concept. Every year, they pay premium into these policies, not in place of investing, but before investing. And every single day, their cash values are rising predictably. They can't go backward. They've already used their policies to control how they financed a few cars, a major home renovation, an extension that they added to the house, and to reinvest into a business, which was a really high caliber opportunity that tracked them down. One thing that my late mentor, R. Nelson Nash, often said is that when you have ready access capital, opportunities of high caliber will track you down. And that is absolutely the truth. And each time that they accessed a policy loan, there were no banks involved. There was no begging. There was no unnecessary interest payments to outsiders. And while they controlled how they financed all these things and their cash values grew daily, untouched, uninterrupted, they were in a position of total and absolute control. That's how ownership works. It's not flashy. It's just effective. And the one thing, I just want to expose something here. I want to expose something that empowers you. You were told that the wealthy get rich just by investing. And that's just simply not true. The wealthy get richer by controlling capital and by being the source of lending, not the victim of it. And that's what you've been locked out of your entire life. You've been taught to chase returns instead of controlling capital. And who profits from that arrangement? The banks profit, the institutions profit, the brokers profit, and they're making a pretty damn good living off of your dependency. But the moment that you control the banking function as it relates to your needs, everything changes. The power shifts. And all those institutions and brokers and bankers, they hate that. 17 years in to my journey of implementing this concept, we have 78 dividend-paying whole life insurance policies in our family banking system. I pay $1.56 million a year in premium. We have $100,000 a month flowing back into our system because our family controls how we finance all the things that we need. We have 22 individual lives insured in our system, and someday someone's going to die. In fact, it's already happened. My father-in-law passed away in September of 2020 after a short 5-week but very courageous battle with cancer. I had 2 policies on his life. I paid the premium. I controlled all the access to cash value, the beneficiaries. I controlled everything. And sadly, when he passed away, Nona, his grieving widow, my mother-in-law, she'll never have another bad financial day for the rest of her lifetime. All 9 of Papa's grandkids have policies on their lives. His legacy has been honored. And so think about your family. Think about all the money that's flowed through your family's hands up to this point in your lifetime for everything that your family has spent money on. Could you write me a check for that amount of money right now? Of course you can't. It's gone. And you've permanently given up the opportunity to earn interest on that money. And so has everyone else in your family, not just for the rest of your lifetime, but for every future generation that comes after you. You can put an end to that. All that you've got to do is just click the link in the description, watch the free session, make sure that you get your hands on a copy of this book titled Becoming Your Own Banker. Take a couple of hours to read it. And when you read it with an open mind, it's going to absolutely open your eyes to a whole new financial world that you never even knew existed. So now you know what they do, but there's an even bigger problem, another problem, and most people aren't prepared for what's coming, whether it's another crash, another correction, another reason the middle class gets wiped out yet again. And so in the next video, I'm going to show you exactly how to protect yourself, not with guesses, not with predictions, but with a system that thrives no matter what happens next. And so click to the next video and don't wait to be the next casualty. A sudden crash, a market correction, a virus, a war, a politician, doesn't matter what the excuse is. People lose jobs, people lose savings, people lose time and trust. And yet most people do the exact same thing after every crisis. They go back to the same advice, the same systems,